Hello, everyone. Good morning. Thanks for taking time out of your Saturday to join us, and welcome to this specialist trading educational presentation. Now, today, what I'd like to do is talk to you about two trading rules that you need to know. These were actually two rules I was first taught some 4 decades ago by my mentors on the floor of the Pacific Stock Exchange, and I use them in some capacity on a daily basis with my own personal trading. In fact, I'm going to share with you a trading technique. So after this presentation, you'll be able to apply this technique to your own trading simply by using these two trading rules. For example, let's look at this chart here of Netflix. This is a current chart. Now, just off of the 5 or 6 bars that we're looking at, with these two rules applied, you would have known that rather than being the seller, you would only have been a buyer in this particular stock at the time, just by looking at these 5 or 6 bars. Then at the very last bar, you would have known that a buy signal was generated right here, right? I'm going to share with you how you could have applied this to your trading so that ultimately when the stock went up, you could have potentially captured 45 points while these buy signals were generated all along the way. Now, as Netflix started to sell off, I'm going to share with you right here on this bar how, if you hadn't got out at these levels, you could have exited on this bar and then gotten right back in on this buy signal right here so that potentially you could have captured another 20 points. And this trade would have been still active if you decided to do so. But I'm going to share with you the rules for this particular technique. And then on top of that, I'm going to share with you and show you that all of these things are actually automatically identified on our platform, the PTS Primo charting platform, the trading educational platform you've been searching for, because it really contains 4 decades of all the information and trading tips and techniques and strategies that I've accumulated on the platform. Everything is one click away with real easy and simple access. So this is going to be a great Saturday presentation. Thanks for joining us once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, you've probably come here thinking, well, I guess this guy's going to tell me what he thinks of the market, or what he thinks I should buy on Monday or sell on Monday, or what the best time frame is to trade, or what the best sector is, what I should be looking for. Well, in my opinion, that's really what leads to most traders failing in the market. So if you come here thinking I'm going to tell you those things, you come to the wrong place. In fact, I don't even, really concern myself with things like that. What we do at Specialist Trading is, first and foremost, we are an educational company. Our only goal is to educate you. We're not here to tell you what the perfect time frame is, or what stock you should buy, or what currency pair or future you should be looking at. We don't believe in that. If you think of it, the entire industry is based on that. You either go into a chat room, a trading room, looking for someone on TV that's going to tell you and give you all the answers, or some dynamic system that never fails. What you really do when you get involved with these things is you're basically taking yourself out of the game. You basically pulled yourself out and said, you know what, I don't know what to do, so I'll let these things decide for me. And in my opinion, that couldn't be further away from the truth if you're trying to be consistent. These are the things that actually lead to losing. So what we want to do is provide you with sound fundamental education, things that have stood the test of time that I've noticed and that I've actually used in my 4 decades of trading, and teach them to you so that you can make your own decisions. In my 40 years of trading, the only traders who have ever been consistent, and by consistent, I don't mean having 1 or 2 good years. I mean 1 or 2 good decades, or 3 or 4 good decades. The ones that are consistent are the ones that make their own trading decisions. Most of these traders never go to a blog or a chat room. They never listen to the guys on TV. They don't even look at the news. They just follow their simple plans and listen to one thing, and that's the market. So that's what we're trying to instill in all of our students around the world. In over 115 countries and in every state in the United States, we teach our students around the world these same principles. And you'll see today when I teach you these principles in this really simple technique that incorporates these 2 rules. But before we begin, once again, we are required by law to share this with you, so please take a moment to view our disclaimer. Whoops, before we go there it is. I'm going to share with you a lot of performance results using these 2 rules, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And remember, since we're an educational company, all examples are strictly for educational purposes only. Now, as I skipped over a little bit too quickly, I want to take this time to invite each and every one of you to follow us on Twitter. I would suggest copying down our handle there, because every day I post different educational information, anywhere from little bits of financial wisdom I've accumulated to signals our strategies have generated. So there's lots of great free information. Feel free to follow us on Twitter. Now remember, Our goal is not to tell you what to trade or how to trade. Our goal is simply to teach you how to trade. So once you follow us on Twitter, you're not going to see where I tell you what to buy or what to sell. I'm basically sharing information and showing you what our courses and what our techniques and methods are based on. But as I was struggling when I first started trading roughly about 43 years ago, my mentors basically taught me the same things. I mean, I was saying the same things to them, saying, why can't I just copy what you guys do? Why can't I just buy what you're buying and sell what you're selling? Because they said, Steve, when the time finally comes when we're not here anymore, and we're not your security blanket, and on top of that, when you see that you can't trade, emotionally the same way we do, it's not going to make any sense. So you have to find your own way. So the same things they taught to me are the same things I teach to my students around the world. So once again, my goal is not to force feed you signals, not to tell you what or how to trade. My goal is simply to teach you how to trade with the specialist edge, the same edge that was taught to me and what has sustained me now for over 4 decades. And hopefully it will be able to sustain you that same amount of time. Okay. Now, since this is an educational class today, I'm going to be sharing with you some really good techniques and some interesting and very profound rules. But as always, I want you to ask me questions, but please wait till the end of class to ask questions. If we stop for every slide the way some other presenters do, we'll be here way too long. I don't want to dig right into your holiday weekend and make you be here for 2 or 3 hours. So please, if you have a question, write it down or try to remember it. I promise I'll answer each and every one of your questions at the end of the presentation, probably about in the next half hour. The only question I will answer is this, and that is this being recorded? Yes, we record all of our webinars, all of our presentations, and each and every one of you will be sent a link to this recording. So if you have to leave early or if you're having technical issues, oftentimes if you log off and log back on, the problem will be resolved. Many times it's just your internet connection. But if you still can't hear or see clearly, we will send each and every one of you a link to this recording, okay? All right, with that said, let us begin today's educational class. And I want to start out by what my mentors taught me, because if you look at the way I traded 43 years ago when I first started on the floor of the exchange, most of you would say, well, that sounds right. That's the way I trade, and that's kind of like what I've been taught. Remember, this is 43 years ago in the 70s. But if you think of it, if I couldn't make a dime when I first started trading using the same things that you're probably using today, why would you think those things are going to work 43 years later? They're mostly not, because they don't have a lot of consistency in them. If you looked at my screen when I was trading 43 years ago, it had probably about 20 or 30 indicators. At the time, we didn't have the internet. There was no such thing as the internet, and we didn't have blogs or chat rooms or trading rooms, but we had subscriptions. We had newsletters. I subscribed to about 20 or 30 of those, listening to all these guys tell me what they thought the market was going to do. I made markets in roughly about 50 or 60 stocks when I was a specialist on the floor of the exchange. So I had to, in my opinion, what I was taught, I had to know about the inner workings of each and every one of those companies. I had to know about the earnings estimates. So I kept records of all their earnings estimates and who the CEOs were and what, kind of plan of attack each company had and what they wanted to do, anywhere from airlines to waste management companies. I traded a lot of different sectors. And then finally, I would rush home to listen to TV and see what these guys thought on TV or on the weekend financial shows. I wanted to listen what they thought the market was going to do. So I did a lot of the things that most likely many of you are doing today. And guess what? None of those things worked. After my first year, I didn't think I was going to be on the floor any longer because I couldn't make a dime. I was basically trading water, and all my hard earned dollars and time going into this wasn't showing any results. In fact, I was really very frustrated, and it's depressing thinking about all the time and energy you put into this and you have nothing to show for it. So I was lucky enough to have some mentors. When I worked on the floor, there were probably about 250 traders on the floor. A couple of them were my mentors. They had been trading between themselves about 40 years each, or 80 to 85 years between the two. And they saw how much I was struggling. And I remember the first things they said to me. They said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. But it's the most difficult thing in the world to simplify your trading. Now let's look at that logically. No matter if you've been trading for 2 weeks or for 20 years, anybody, it doesn't matter how much experience you have or don't have, anyone can pile on more and more things onto their trading plan. You can subscribe to more blogs, you can go to more chat rooms, you can watch more mentors, you can pile on more indicators, you can look at more institutions. Anyone can do that. It really doesn't take a lot of conviction. It doesn't take really a lot of character to do that. But it takes a lot of character to release those things, to let go of them and say, you know what, I'm not going to rely on these things anymore. I'm going to stop looking at them. I'm going to stop listening to them. That takes a lot of courage. But once you grasp that concept, because it is the most difficult thing in the world to do, to simplify, but once you do grasp it and follow it, that's when your trading begins to become consistent. Trust me, this is what I first learned, and I struggled with it for a couple of months. I couldn't do it. It was like, wait a minute, I always taught I was supposed to listen to these guys. I was always taught I was supposed to look at earnings. I was always taught I was supposed to find out what the institutions wanted to do. I was always taught to listen to support and resistance. Once I let them go and completely stop looking at them, that's when my trading started to become consistent. I'm sure you're saying, well, what did you follow then? Well, that's what I'm going to be sharing with you today, because my mentors taught me the only thing I should be listening to is right in front of me, and that's the chart, okay? All right, with that said, let's begin today's educational presentation. Let's go into these rules, all right? Now, remember, it's the simple things that work. It's not the complicated things. So you're going to see these rules, or you're going to say to yourself, they're just too simple. How can I use these? They're not going to do me any good. Well, trust me, I still use these on a daily basis. All right, rule number 1. Apply the color ribbon on our PTS Primo charting platform feature of the buy-sell line. All right, so what exactly is that? Well, let's look at this chart here in Zoom, okay? This is coming into May. Now, here's the way most traders would assess this chart. They say, well, Steve, I mean, look at, we broke this support here. We're going lower. Look at all these down closes. So this is a downtrend. So either I'm going to look to short Zoom here coming into May, or else I'm going to stay out altogether. That's the way most traders would trade, myself included, when I first started trading. But once you have our platform, you can apply these simple rules, which are not black box. We teach you everything, what they're based on. For example, the first thing you want to do is come to our platform. In the upper green strategy tab on the far left, click on the buy-sell line. Now, this tool will automatically get you on the right side of the market. It'll tell you whether you should be a buyer or a seller. It doesn't generate signals. It just tells you whether you should be a buyer or a seller. Now, there are 4 different categories we've featured for you. The buy-sell line is simply the 50-period moving average. We have different ways to view it. Let's look at the color ribbon, okay? What the color ribbon does is at the bottom of the PTS Primo charting platform, it colors the bottom here either blue or red. Now, if you see a blue bottom, what is that telling you? Well, it's saying that the overall trend is up. Now, if the trend is up, remember, what is the only thing we're listening to? We're listening to the market, the chart in front of us. If the market wants to go one way, do we want to fight it and buck the trend? I know we've all been taught that, right? We've always taught to buy low and sell high. But if the market wants to go up, we should be a buyer as well. So we're not even going to consider selling. Where most traders would see this as a downtrend, we see this now as a buying opportunity, okay? Now, if you're still speculative and you say, well, how do we know this is a buying opportunity? Well, look what happened to the stock. So tell me, if you had shorted the stock on this so-called breakdown right here or sold out of your position, how do you think we would have felt a couple of weeks later, right? Remember, when you buck the trend, you're basically swimming upstream, all right? It's going to take you a lot longer. You're going to exude a lot of energy, and you're just going to be frustrated trying to buck the trend, trying to swim upstream. You will have much more simpler way of trading. You'll have a lot more better sleeping nights than trying to buck the trend simply by going with the trend. Now, this works to the downside as well. Same thing here as we look at CHK. This was coming into May again. Obviously, someone would say, well, Steve, how can we say this is a downtrend? Look at how far up we've been going. In fact, I bought right here, and I've got a nice one-day profit. Well, good for you. We're not saying that price doesn't go down in an uptrend and it doesn't go up in a downtrend. We're saying that we want to increase your odds for consistency. And the way to do that is to be in sync with the trend. Now, how do we do that? First thing you do on our platform is to click on the buy-sell line, because most people would say, well, this is an uptrend. Why do I need to do that? Well, let's click it on. In the drop-down menu, click on color ribbon. Let's see what the color is. Reddish orange. So what is that telling us? It's not blue. It's telling us the overall trend is down. Now, most of you would say, well, how could the trend be down? We've just been going up for the last week. Well, most traders would jump in, and the way you may have bought right here or even bought here, if you would listen to the trend, how well would you have been doing a week or two later? Remember, we're not trying to pick tops and bottoms. We're not saying you won't have some nice bounces in an overall downtrend, but rather than looking at those as buying opportunities, they should be viewed upon as selling opportunities. You see how simple this is, okay? All right, that's rule number one. Let's go on to rule number two. Let's say you have a strategy you feel pretty comfortable with, a method that it's been doing okay, nothing great, but you feel comfortable with. You will increase your odds for consistency if you apply rule one, and then when your signal generates a strategy, and you say, okay, I'm going to apply this rule, I'll be in sync with the overall trend. So say the overall trend is up. Well, rather than just buying at the market when your strategy generates a buy signal, rather than placing a limit, what you want to do is wait for a bar that closes in the top 25% of its range. So let's say your strategy, your method is based off of earnings, okay? So let's say the earnings come out, you come home after work, or you see the market at the end of the day, and for some reason they're really good earnings, but the bar closed at the very low or towards the middle of its range. Well, you shouldn't take that trade. For example, this is the bar you're looking for. You want to see a bar close in the top quarter of its range. You don't want to see it close here or even lower here. So why would you wait for it to close there? Because the market, not me, not some guy in a webinar, not some guy on TV, not some institution, not some support and resistance, but the market is telling you it wants to go higher on the short term. So you see, if you have a close in the top 25% and you see that you are trading in sync with the overall trend, you have the short term and the overall trend in sync with each other. This automatically increases your odds for consistency. So, for example, we are in an overall uptrend because we have the color ribbon here, blue, all right? Now, as we apply these top bottom 25%, I'm sure some of you would say, well, Steve, this is kind of cumbersome. I've got to go through all these bars here and look at this on a daily basis. This is where we made trading simple for you on our platform. Once again, go to the upper green strategy tab, click on top bottom 25%. In the drop-down menu that appears, all you have to do is click on signal arrows, and it will show you all of the bars that closed in the top 25% of their range. You see how simple this is, okay? So this will tell you these high probability entry points. Now this was an example to the upside. How about to the downside? Well, let's say your strategy generates a sell signal. All right, so you look at the chart and you say, well, okay, we're in an overall downtrend, so I'm in sync with the overall trend, but I want to make sure that this signal is generated on a bar that closes in the bottom 25%. So for example, you want to see it close right here if it's a sell signal, or you'll wait till you see that first bar. Now, a lot of you will say, well, Steve, I would rather sell up here. I'll get a better price and I'll make more money. Remember, trading consistently is not about getting in at the very top or the very bottom. It's about having a high probability entry point and then entering. You're not going to always get at the top. You're not going to get always at the bottom. So stop looking for that holy grail. It doesn't exist. I've been trading for 43 years, and very rarely do I buy at the bottom and sell at the top. It hardly ever works. But that doesn't matter. All you're trying to do is get a good chunk out of that move. And you want signposts and signals telling you when that move's going to start. So if you get a sell signal, whatever strategy you're trading, I don't care what it is. It doesn't have to be one of mine. It could be one of yours. It could be based on the full moon, the tides of the ocean. I really don't care. It should close in the bottom 25% of its range, and the overall trend should be down. Because if these two things happen, well, the market's telling you it wants to go lower, not only on the short term, as you see here, but on the overall trend, as we saw with the red-orange bar. So looking at this right now, once we apply the top bottom 25%, click on signal arrows, and look at all the signs. Not me, not some guy in a trading room, but look at the market telling you it wanted to go lower, okay? All right, so I'm sure many of you are saying, okay, this is all well and good, Steve, but how do I apply these? How's this going to help me? I don't understand. Well, how can we apply these two rules to help our own trading? I'm going to share with you right now a trading technique, okay? Now, someone would say, oh, God, this is great. So I'll be able to trade this and start using this system on Monday. Remember, a trading technique is not a system. It's not even a strategy. A technique is just one of the pieces of the puzzle that make up those things. In other words, a full-fledged strategy tells you exactly where to enter, tells you exactly where to exit, tells you exactly where to place your stops, tells you exactly about money management, how many shares, how many currency pairs lots to trade, how many futures contracts. See, those are all important pieces of the puzzle. A trading technique only incorporates maybe one or two of those. So the remaining things, such as exit, stop placements, so forth, they need to be determined by you. So I'm just going to share with you a trading technique today. So you can still apply this to your trading, but please practice this, because we cannot in any way guarantee that any of the results I'm about to share with you will be repeated in the future. But this is a very high probability technique, but you need to practice it. So please do not jump in on Monday and start doing this. Practice it, see how powerful it is, and once you have it under your belt, then you can start trading with real capital, okay? All right, remember, all this is done automatically as well on the PTS Primo charting platform. I want to share with you all these charts just took place within the last month or two, okay? So you could have taken advantage of this in the last month or two. In fact, some of these happened in the last week you could have taken advantage of. Okay, let's start out with this chart we started out in the beginning, Netflix. How could we apply this? Well, the first thing you do is click on the buy-sell line, and we see here in the color ribbon is blue. And the next thing we do is click on top bottom 25%, and we have an up arrow here. All right, so here's how we want to do. Usually what you want to do is you want to see an up arrow that is kind of where the price has slid down for a day or two. That way you're getting at a lower price, okay? So normally what we would do is we would suggest, remember this is not a system or a strategy, it's just a suggestion in a technique, saying buying once price trades right above there, okay? We don't want to just buy at the market on the close. You can if you want to, but that's a little bit more advanced. Let's just say we want confirmation that it trades above this highlighted bar here with the arrow. All right, so on the next bar, we never traded there. So it was a good thing we didn't buy at the market, right? Because what would most likely happen? You would have bought, and then when you saw this down, you said, you know what, this doesn't work, I'm going to sell. And you would have sold, and then look what happened the next day. So what we're saying is, wait for it to trade above that arrow bar. All right, so now we've entered roughly right here, okay? Roughly about 375. Now, on the very next arrow that appears, which was right here, that's where we want to place our stop. So we're going to place our stop somewhere just below this, okay? Somewhere, maybe it can be 1 point, 2 points, 50 cents, it's up to you, but it needs to be below this bar. So every time we see an arrow appear, we will place a stop below it. So now we see that price started to come down a little bit. We're still kind of breaking even, but we have a higher low here, so we move this stop up to here, okay? Now, we continue to track. We see the next bar makes another arrow, so now we move our stop up to there. The next bar makes a higher arrow, so now we move our bar up, and now we've locked in some profit. We entered here, 375, and now our stop is roughly about 390. So we've got a 15-point gain going on there. Now, at any time, if you wanted to sell, that's up to you. You don't have to wait for it to be stopped out. You could have sold right here on this close and say, hey, listen, I've got a nice profit. I'm getting out. Remember, what did I say at the very beginning of the presentation? The reason why most traders fail is because you're listening to someone or something else. You're taking yourself out of the game and saying, well, what's this guy doing? I'll just follow whatever he does. Basically, when you do that, what are you saying out loud? You're saying to the markets, I don't know what to do. I'm not smart enough. I'm not educated enough. I don't have enough experience. So I'll let you do this for me. Can you imagine any other career, any other endeavor where someone would say that? Can you imagine a businessman, a CEO saying, hey, I don't know how to run this company. Can you tell me how to do it? But traders do this every day. What my goal is to teach you these things so that you can ultimately say, you know what, Steve, I know where to get out. I know where to enter. I don't need to rely on anyone else. I don't have to go to chat rooms anymore. I don't have to listen to that guy in the blog. I don't have to wait for earnings or economic reports for jobless claims. I know what I want to do. That's how you will become consistent. So what I'm pointing out to you today are just suggestions. You can exit anytime you want. You've got a nice gain here. But if you wanted to stay in, well, guess what? You would have had some more profit here. And then another arrow was right here. So you could have moved this stop up to here, and you locked in a very nice profit. Look what happened after that. You would have been stopped out. So just by buying here and waiting for the market to take you out, that's 45 points. Now remember, you could have gotten out a lot more, but that would have been up to you. And there's nothing wrong with that. There's nothing wrong either with exiting on the very first up day here. Many traders say, listen, Steve, I got in at roughly 370, 375. I got out with a 10-point gain. I'm out. Nothing wrong with that either. Okay? It's up to you. The only thing wrong is when you listen to someone else telling you what to do. You have to be in charge of your own trading. If there's one thing I try to instill in all my students, and if I stopped teaching tomorrow, I would hope it would be that one concept of you have to be in charge, no one else. Okay, so let's say you exited the trade, but you still like the stock. You think, hey, this is great. I like this technique. Well, look what happened a day or two later. Here is another up arrow. So now look at, we've seen price decline. So these are the type of entries you're looking for. All right. So now you, once again, you want to wait for it to trade here. As you get more advanced, sure, you can place a limit down lower or maybe at the market, but more conservatively, you wanted to enter, and let's say you enter around 420, place your stop below the last arrow. And as arrows are generated, you move your stop from here to here. Okay. So now you're diminishing your risk. As we go higher, this was, I believe, up until last week, you move your stop up there. So now you've got a locked in profit. You roughly purchased at 420, and now your stop here is roughly about 440 or so. You've locked in roughly about 40 points, or 20 points, I should say. But coupled with the 45, that's 65 points, being very conservative and just listening to the market, let the market take you out. Did you see here how I didn't look at any economic news, didn't concern myself with the pandemic, didn't concern myself with closures, business closures, didn't concern myself with jobless claims, didn't concern myself with some guy in a blog or a chat room what he thought of the market, didn't listen to any of that. The only thing I was looking at was the chart in front of me and listening to what it was telling me. And look at how consistent you can be just doing that. All right, let's look at another example here in Boeing, all right? Same thing, we apply the buy-sell line in our color ribbon here, it's reddish-orange. So what is that telling us? It's telling us the overall trend is down. Do we want to be a buyer? No, we don't, because if the overall trend is down, we want to go with it, right? So we're going to be a seller. Now, what do we have? If we click on the top bottom 25%, here's a bar that closed in its bottom 25. So what we want to do is go short one or two ticks below. It's up to you, once again. And you don't have to short the stock. We realize shorting a $300 stock is kind of a difficult thing to do. So if you wanted to actually just purchase puts, maybe have some type of spread, some option spread that has a downward bias, it's up to you. Remember, you're in charge. How you want to enter this trade and how you want, particularly how you want to do it, is completely up to you. So you wait for this to trade. It doesn't do it on the next bar. And then finally, it does trade there. So you're short, all right? Now, since we've had arrows all the way down, the last arrow was right here. So we have very minor risk. You could have roughly entered roughly about 300 and your risk is about 310. That 10 points is very small for a $300 stock. Now, as the trade goes down, we see here that we had a nice one day, but now we're starting to rally. And then here's another arrow generated. So we move our stop down here. And now we're locking in more profit. We continue to track it all the way down. And now we've got nice profit locked in. We continue to track this as long as we want. Now, sure, we could have exited and taken a profit right here. Even off the first day, we could have entered a profit exit right here. But if you decided to stay in, you ultimately would have stayed in until the 20th of March. You place your last stop and been stopped out here for 195 points. Now, you remember how March, the market was just falling out of bed? Most traders lost money. Why? Because they were swimming upstream, because they were trying to buy against the overall trend and the short-term trend. Do you see how simple trading can be once you listen to the market? And when it told you, listen, I want to go lower on the overall in the short term, then you just jump on board and say, okay, well, then I'm going to sell too. But you only lose money when you're out of sync with the source, and that's the market you're trading. And then look what happened. And it started to go up into the rally into April. All right, so let's look at some more trading techniques. All right, we're going to apply this simple process, and I'm going to get out my trusty pointer here just to show you how you could have done this. Let me get out the pen. All right, so as we're looking, price is going down, but we have the blue bottom here, which means that we're in an overall uptrend. So we'd want to buy once we trade just above here. Now we opened right here. So if you decided to stay in, you roughly would have been long about 155. All right, and you place your stop right here. Now you're long at 155, your stop's right here, roughly about 142. If you wanted to take this trade, you could. If not, well, you said that's too much risk for me, so then you don't take it. But look what happened. A couple of days later, you can move your stop, and you're basically breaking even or making a point or so. And as the trade went higher, you entered at 155 and now you're out roughly about 165. So you made 10 points. Now, if you wanted to get back in again, you could have gotten in right here, but most likely you would have been stopped out. But you still would have made money on balance. That's the beauty of this technique. Let's look at the, let me see here. Let me get rid of this. Whoops, I have to erase these. I don't want to keep these on the screen. Just let me erase all these first. Let's see, erase all drawings. Okay, there we go. Okay, what did we look at? Zoom. Was that the first one? Yeah, so let's look at Lulu. All right, I'll get out the arrow once again and the pointer. Now, this is something more likely that you'd like. When you see the bottom blue, you want to see price selling off, and if you can see an arrow, a buy arrow towards the low, that's where you want to buy. So you would buy roughly right here at let's say at 218, okay? Place your stop right here, roughly about 213. So you're risking 5 points. And look what happened. Now you have any chance here, you have a nice profit, you could sell whenever you want, but if you wanted to stay in, you'd move your stop up here to 228, you're making 10 points. You move it up here to 233, and you've got a nice, what's that, a 15-point gain, because ultimately you would have been stopped out right here. Now look what happens. Price sells off again, and you have an up arrow at that bottom. So you have a chance to get back in again, roughly at 238. Your stop, initial stop is right here at the arrow. Then you move it up with the next arrow. You're long at 238, and ultimately you still be long at roughly about 258. You've got 20 points right there. So just off this simple, from in the month of May, I mean, we're talking about 35, 40-point profit in Lulu that you could have made just by following this simple and easy technique, okay? Let's look at our next example here, as I just have to erase this, and we go on to downside here in CINF. This looks very similar to Boeing, but this is where we talk about consistency. Remember, consistency is in all of our methods and techniques, but consistency does not mean that every trade is a winner. Consistency simply means that we will have losses from time to time. But if you keep your losses to a minimum and let the profits run, most likely you will be able to recoup those losses, even with our simple techniques like this. For example, the overall trend is reddish orange, so we know we're sellers. All right, we knew this way up in advance. So we would have gotten short right here once you traded below that, roughly about 82. And place your stop, let's say it was a really tight stop right here. You would have been stopped out 2 days later at about 85, okay? So you just lost 3 points. All right, so not a large amount, but that's okay. So now we see another setup right here. So we go short right here, and this is roughly at 80. All right, we place our stop here, and then we have another down arrow, so we place our stop here, and guess what? We got stopped out at 82. So now we've lost 2 points. So we've lost a total of 5 points. This is at the point where most traders say, listen, I know 5 points isn't a lot, but I've had 2 losers in a row. This really isn't working. I'm going to stop trading this. This is at the point where you should be, because remember, if you keep your losses to a minimum, you have proper money management, this is usually where it kicks in. Now, the very next setup, you could have gotten short right here at 72. And then you simply track the stops all the way down if you wanted to, okay? And look at all the profit you could have locked in until ultimately, if you traded this, you could have gotten out at 52. So you just made 20 points. Now, could you have made back that 5 that you lost? Sure. This is what we mean by consistency, okay? The 20 points recouped your loss of 5, and you had you done and exited this way, you could have potentially captured 15-point gain. So this is what we mean by consistency. Not every situation and not every setup is going to work, but that's okay. What we want to see is that consistency where we'll be able to come back and hopefully recoup it 1 or 2 trades down the road. All right, let's look at TGT, another example here. Remember, we have a sell-off coming, so what do we want to do? Well, we want to take advantage of that sell-off if we happen to see an up green arrow. We do here, so we would have entered roughly right here at 112, placed our stop right below it at about 108, so we're risking about 4 points, okay, if we lose. And now as the trade progresses, we move our stop up here. Now we've got a lock-in profit of about 4 or 5 points. We move our stop up even more in the next up arrow. And then finally, at this arrow up here, we get out roughly about 123. So in a couple of weeks, we made 11 points, and now we're out of the trade. Once again, did I ever look at earnings when this came out? No. Did I ever concern myself with anything about what the company was doing, about what decisions the company was making or what it was planning to do? No. Did I ever look at support and resistance or what the institutions were doing? No. Did I ever look at what was going on with the pandemic or fundamental or economic news about the economy or jobless claims? No. What then did I base my trades off of, or my entries and my signals? I was only listening to the source. That is the chart in front of me. That's really all you need to listen to when you really want to be a consistent trader. Remember, it is the simplest thing in the world to overcomplicate your trading. Anyone can do that by adding more and more things and telling yourself, I need to listen to these things. But it's very difficult to, it's very difficult to simplify. It's very simple to overcomplicate. Now let's look at Netflix, okay? Once again, let's look at that example we shared with you. I'll get out the arrow. Once again, here's an example here coming into May, bought at 417.18. That's where you have your stop. And then right here is ultimately where you would have been stopped out, okay? Just another way as the chart unfolded, how you could really potentially have a nice trade. Okay, let's go forward here. Let's look at a down example here in cyber, okay? Obviously, what direction is the overall trend? The overall trend is down because the buy-sell line told us the bottom of the screen is reddish-orange. So we don't have to worry about being a buyer. You know, we're never going to say to ourselves, hey, but Steve, look at the support right here. We made a double bottom, okay? That institutional class I took says all the institutions are buying, so I'm going to buy right here. As long as the overall trend is down, we're not going to concern ourselves with any of that. And then we add the short-term top-bottom 25%. So our entry would have been right here to go short, roughly about 110. We could have placed our stop below the first down arrow and minimized our risks. Then right here, basically breaking even and just track. All we want to do, if we want to stay in with this technique, is just track the trade all the way till we get out roughly at, let's say, 88, okay? That would have been a nice profit of roughly about 22 points in a couple of weeks. Now, remember, you could have gotten out any place. I'm not telling you this is a system and you have to trade it this way. I'm just sharing with you one simple way to trade this. When you have these very, very strong extreme trends one direction, then this is where this technique comes in. But if you have a choppy market, then you may want to have a fixed exit and get out with a certain amount of point profit or so, okay? One simple way to determine that is once you know how much you're willing to risk. For example, as we look here in this particular example here, our initial entry would have been roughly about 110, and our initial stop would have been right here, roughly about, let's say 117. So basically, we're risking 14 points. Now, what you want to do, or I should say 7 points, what you want to do is double that, and that's how much you want to make. So if we're entering at roughly 110 and getting out at 117, our risk is 7, so we want to double that. So instead of 7, we want to make twice as much as we're risking, so it would be 14. So that would mean we would exit at 96. This is just a simple way to do this, would have been roughly about right here. So at this point, we'd have said, I'm taking a profit, I'm out. I just made twice as much what I wanted to risk. If we wanted to triple that risk, we would have exited roughly at another 7 points lower down here and so forth. So that's another way to have fixed exits. It's very simple. But the main thing is, if you're going to have a fixed exit, remember, you want to at least make twice as much as what you are risking, okay? That's a good way to determine it. And let's look at Facebook, okay? Here's another example here of what we could have done. Let me get out the pen. You could have entered right here, roughly about 192, okay? Remember, you could have purchased calls. It doesn't matter that you have to purchase the stock. Place your risk right there at roughly 182. So you're risking 10 points, all right? So if your risk is 10 points and you wanted to not track the trade, you want to say, I'm going to get out at twice that. So you want to add, let's say, 20 points to where you entered. So if you entered at 192 and you want to get out 20 points higher, that would be 212. Well, guess what? 212 is right here. You would have exited roughly about right there. That's not a bad trade, right? You made 20 points in a couple of weeks. But if you wanted to stay in, you would have simply moved your stop up, and you would have eventually been stopped out here. Now look what happened. We started to sell off again, another up arrow, so we could have gotten in again here and then simply move our stop all the way up. We'd still be in this trade. Or we could have said, well, we're going to enter at 208 and our stop is roughly at 200. So roughly we're risking 8 points. So that means I want to make 16 points, okay? So 16 to 208 would be 224, and I would have roughly exited right here on this date right here. So in about 3 or 4 days, I made roughly about 16 points. That's another way to trade. All right, but ultimately, who's in charge? Not me, not some guy in a chat room, or not some guy in a webinar, not some guy on TV, not some earnings report. You are in charge. That is the only way you will become consistent, okay? Okay, so let's recap before we go into question and answer. I want to tell you about a great offer I have for all of you today. Remember, add the color ribbon buy-sell line. Remember, the buy-sell line is simply the 50-period simple moving average, okay? But we have different ways in which to view it to make it simple for you. So you don't have to clog up your screen, different ways to see it. And basically, on our platform, the simplest way is to apply the color ribbon, all right? The blue color ribbon means the overall trend is up. Buy signals should only, or the signals should only be buy signals. The reddish orange means that the overall trend is down. Now, once you know the overall trend, because that's not a strategy, it's just telling you what bias you should have, then you want to go to the short-term trend, which is the top-bottom 25%. These are the bars. If you have an overall uptrend, you want to see the bars closing in the top 25. An overall downtrend, you want to find the bars closing in the bottom 25. Now, you can add these to your current method, okay? And it will increase your odds for consistency. But if you want to just trade off these two, well, use the trading technique I just shared with you today. Remember, practice this. Do not just simply say, gosh, this is great. I'm going to start trading it Monday, because I can almost guarantee you lose money because you jumped in too quickly and you didn't really study it well, okay? And then lastly, all this is done one click away on the PTS Primo charts. Sure, you can apply this to any platform you're using. Maybe it's your broker online platform, but everything is one click away. You're not going to get the color ribbon. You're not going to get the 4 different options for the buy-sell line. You're not going to get one-click access to see the arrows. You're going to have to do that yourself. With the PTS Primo charting platform, everything is one click away. It's so simple. So ask yourself, do you think these simple rules and technique can help your trading going forward? I think most likely the answer is yes. Just seeing the results I share with you today, just off things that have happened in the last month, I think a lot of you would say resoundingly yes. So because of that, we have a great attendee discount. This is a great offer. We're going to slash the price by thousands and thousands of dollars. Plus, we're going to give you a ton of information for a small, small price. Firstly, we're going to throw in our Bootcamp course. This is a trend trading instructional course online where I give many more techniques, many more ways to trade specifically in line with the trend. You're going to learn all the entries, all the exits, all the stops, aggressive and conservative ways to apply this. This is our trend trading special. But we're not going to stop there. We're also going to throw in a full-fledged strategy. This is strategy number 1. This is one of our most consistent pullback methods. Now, a pullback method is one that likes to buy at the lower levels of an overall uptrend, and one that likes to sell at the higher levels of an overall downtrend. For example, let me show you what I mean here. Here's an older chart in the spiders. Most people would think, hey, this is a downtrend, right? Just the way we assumed before. But because of the way strategy number 1 works, it uses many of the rules I shared with you today, but also incorporates some other ones with a proprietary indicator. It actually generated a buy at the very bottom, okay, of that sell-off. So where most people thought the spiders and the S&P 500 was getting ready to go into a downtrend, it says you should actually be buying, and look at the nice profit you had. And that was a quick 8-point gain in the spiders. Doesn't seem like a lot, but that was nearly 700 points to the upside in about a week or so. Okay? You're going to get all the rules. Remember, what I shared with you today was a technique. This is a full-fledged strategy. You can trade it aggressively, conservatively, but we're not going to stop there. We're also throwing in 12 extra bonuses, okay? Obviously, you're getting our Trend Trading Bootcamp. You're getting strategy number 1, but you're also getting our entry course. This is a complete course on how all the different ways and advanced ways in which to enter. Our advanced exit course, different exit points, and finally, our advanced stop placement course. So once again, our goal is to provide you with this information so that you can make your own decisions. This is a wealth of information. We're also going to provide you with a buy-sell line scanner. This is a scanner where you can scan for stocks that are either in the buyer's bias or seller's bias on a nightly basis. You also get the scanner for the top bottom 25%. So you'll know which particular stocks, currency pairs, futures are generating top 25% bars or bottom 25% bars. You're also going to get a scanner on the PTS charts to find strategy setups, okay? A multi-scanner to scan for multiple strategies at once. You can smart click our chart entries and exit tool. With one click, you'll know exactly where to enter and exactly where to exit, okay? Now, if you like to trade Metastock, TradeStation, Ninja Charts, MT4, you can apply all these. We'll give you the add-ons so that without the scanners, but just the up and down arrows for the signals for the strategies, you'll be able to see them, okay? But here's the best thing. The very bottom one, bonus number 12, you're going to get 6 months of the PTS Primo charting platform for free, okay? Look at all of these values here. All of these are going to be free. Now remember, you're going to get all this with a lot more different things as well on the platform. 6 months would normally cost you close to $900. You're getting that 6 months entirely for free. So I think this is the best thing about what we're sharing with you today. You're getting the full-fledged strategy, more edges to trade with a trend, all these extra bonuses, scanners, along with 6 months free of our platform. It doesn't get any better than this, so let's break it down. Okay, one of our most consistent pullback methods, our premier trend trading course, proprietary indicator settings, complete strategy rules, all the entries, exit stops. You can apply this to any market and time frame. And the last thing at the bottom I didn't mention, you're going to get educational correspondence, my personal email where you can email me whenever you like with questions, okay? So our Saturday morning discount, if you purchase these all separately, it would cost you close to $8,400, or actually over $8,400. We're going to discount this tremendously. You're going to save thousands of dollars. We're only going to charge you $297, less than $300, okay? You're going to save over $8,100, but this is for today only. Now, obviously, we're in a holiday weekend, so I'm sure they would extend it to Tuesday morning, but after that, it's going to be going probably back up to $8,000 again. So, as I often state, a year from today, you will have wished you became a member of these courses because you're basically getting 43 years of education and information that I've accumulated onto the platform and onto courses for less than $300. I mean, this is a really great offer. Lastly, you're going to have me there as your personal correspondent. You can email me whenever you like, and I will answer questions if you have any doubts or any issues that you can't really fully understand. So here's how to take advantage of this, okay? Contact Pro Trader Strategies. They're my sister site. They're in charge of all the discounts and all the pricing and all the tech support for the platform. They can really help you. If you have some questions concerning pricing or concerning the strategies, I would really recommend calling them at 310-598-6677. They have manned trading consultants now. They can answer any question. They're manning the phones. They would be more than happy without any selling obligation. They would be more than happy to answer any questions you have. Now, this link you see will take you to the sign-up page if you want to sign up online. It's not a live link, but they just posted a live link in the chat box. If you go to the GoToWebinar column on the far right, if you look at the column that says chat, there is a live link that's just been posted. That link, all you have to do is click that on and it will take you to the sign-up page, okay? I'm going to leave all this information up here. I promised you the last 10 or 15 minutes for questions. So if you have any, just go to your question and answer box. I will answer any questions that you may have, okay? So I'm going to open it up right now. Someone is asking me, can this work for intraday trading? Yes, it can. I'm sure many of you have seen in the past, I've often stated that most of my trading is intraday. And so these same principles can be applied to trading 5-minute bars, 10-minute charts of the futures, for tick charts of currency pairs, Bitcoin. It makes no difference. It makes no difference what time frame. It also makes no difference what market. So I don't want you to think, even though the majority of charts we showed were stocks, that's okay. You can still apply this to currency pairs. You can apply it to Bitcoin, commodities. We have a lot of traders who use this on commodities because when the market started to go south last month, what a lot of traders did in March and April was switch over to only trading commodities, and our trading methods and techniques work just as well on commodities as they would on stocks. They also work well on E-mini futures and currency pairs, so it makes absolutely no difference. Someone saying, what if I want to stick with my platform? Well, that's fine. Remember, we said with this great offer, you can still use, if you have TradeStation or NinjaTrader or Metastock, you can still use those platforms, and we will provide you with the add-ons. Those are the add-ons that you would upload onto your platform where they will generate the up and down arrows. But remember, they're not going to generate the scans that we produce for you. The one-click access is not going to be there. You're going to have to search in the edits section or the indicator section where to find these. It may take you a good 5 or so minutes to find the tools, where on our platform, which you get anyway free for 6 months, it's one click away. Okay. This question, I'm a beginner. The buy-sell line indications are to be done after the market close. The good question. Actually, no, they're updated as the market is live, so you can also see intraday as well. Remember, you don't need to wait for the market to be closed. If price is in the buy-sell line and you're trading a 5-minute time frame, that's fine. So no, they are not updated. They are happening dynamically in real time. Okay. So that's a really good question, and that's a great way to trade. This is not something where you have to wait. And also, once again, some people have asked in the past, they will say, well, does the color of the buy-sell line repaint? In other words, after a day or two, does it change to another color or go back to neutral? No, it will, once that time frame that you're looking at is closed. So if you're looking at a 5-minute bar, once that's closed, that's where the color is. Now, the next bar could change to red or orange. And once that's closed, that's where it is. Okay, so I don't want you to think that, we'll change the colors a day or two later. Everything is set once the bar closes, okay? Good questions, though. Very good questions. Lastly, someone is saying the top-bottom 25%. Can you explain that again? Yes. In other words, if you take a bar, I don't care if it's a 5-minute bar, it could be a weekly bar, a monthly bar. Let's say just to make things simple, let's say it's 4 points. From the bottom of the range to the top is 4 points, okay? Now, the top 25% is that top 1 point. So that's if you're in the overall uptrend, if the buy-sell line is coloring the color ribbon blue, you want to see it close there in that top 25%. Now, if the overall trend is reddish-orange, you want to see it close in the bottom 25% of that bottom 1 point. All right, you don't want to see the opposite. Unfortunately, most of us do the opposite. You want to see it close there. Now, as I said, when I first started trading, when my mentors taught me these things some 4 decades ago, it was difficult because I had to look through hundreds of stocks on a night to find out which closed at the top, which closed at the bottom. With this offer we're giving you today, you'll get the ability on the platform to scan to see all of the bars that close in the top 25%. You'll also get the ability to see all of the bars that closed either blue or red. So this is great information. You have it right there, and it probably takes you less than a minute every night. That's how great the platform is. So that's why we always suggest, sure, you can use your own platform, but why would you want to? Everything is so simple and 1 click away, okay? Now remember, this offer is tremendously discounted. Roughly about $8,400 down to $297. You're going to be saving over $8,000 because next week this will go back to that price. So we don't want you to explain. I mean, you really have to, have that much and say to yourselves, well, can't you explain to me why do I have to spend that much money? Because this is such a great deep discount. Okay. Now, after 6 months, the platform, if you decide to stick with it, well, I'm sure most of I would say roughly 90 to 95% of all of our students who get the trial of the 6 months of the platform stick with it and they continue to be subscribers. I think the price is roughly about $97 per month, which is still very inexpensive, but that's your decision. You don't have to commit to that. I would say explore, research, and experiment with the platform for 6 months. And then after 6 months, it's your decision whether you want to stay on or not, okay? But $97 is extremely inexpensive, okay? Yes, it does run on Mac. There are a couple of changes you have to make for it to run on Mac, but they teach you that, how to do that. Pro Trader Strategies would be more insightful than I would because, once again, they're in charge of all the tech support and all the, the platform issues. I'm just in charge of all the teaching and trading, but yes, we do have Mac users as well. Okay. Once again, give them a call if you have any questions about tech support, the strategies, using the platform, getting the add-ons. Give them a call. There is no obligation. They would be more than happy to answer your tech support questions. Okay. It can be also applied with Thinkorswim, but there are also some changes you have to make with that and NinjaTrader. and they can answer that for you as well, okay? But yes, you can apply it with Thinkorswim with their data. You just have to use a NinjaTrader platform, I believe. But contact Pro Trader Strategies. They can answer this question. There's absolutely no obligation. They would be more than happy to fill you in on all the details, okay? As we close here, I just want to say thank you for taking time out of your holiday weekend for joining me today. I hope you learned a little bit. I know we're a little bit different from other webinars you may have attended because, you know, most webinars you go to, they're just trying to sell you something and they're charging you $2,000 or $3,000. Trust me, I know you're aware of what I'm talking about. Many of you have probably taken the bait and purchased something for $2,000 or $3,000 off a webinar. And then you say to yourself, oh gosh, this doesn't work. Why did I waste my money? We always want to have a very inexpensive price, like less than $300, which we've shared with you today. And on top of that, even if you don't decide to become students of ours, we want to give you some education so that you can start trading with, which I did today, some free trading education. So remember, practice this education. Don't just jump into it. Practice it. And any questions concerning strategies, concerning tech support, do not hesitate to contact Pro Trader Strategies. They would be more than happy to answer any question without any obligation. They have trading consultants manning the phones right now, and they would be happy to answer your questions. Thank you once again. I hope you all have a great weekend, and I wish you the best of luck. But most of all, I look forward to all of you becoming students of mine at Specialist Trading and Pro Trader Strategies. Have a great weekend. I'll see you next week. Bye-bye.